Good morning, and thanks so much for joining me on Stocks to Watch. This is BloombergQuint, and I'm Mathew. My guest today is Avinash Gorakshakar of Profit Mart Securities. Good morning, Avinash, and thanks so much for joining me today. The signs for India on the COVID front are seemingly good because Sunday's number was the lowest in 6 months, and all the while the vaccination drive across the globe and also the search for a new vaccine is continuing. The latest from Cadila Healthcare, in fact, is that Zydus Cadila has announced that its plasma DNA vaccine to prevent COVID-19 was found to be safe, well tolerated, and immunogenic in the phase 1 and 2 clinical trials. And the company is now planning to initiate phase 3 clinical trials in around 30,000 volunteers. So, if this vaccine actually comes through, how good is this? In fact, Edelweiss is estimating that if successful, it could increase FY22 earnings by about 50%, and it could be a valuation catalyst as well. Do you hold that that's the case for this company as well?
Yeah, good morning, Alex. I think definitely this is a positive development for Cadila, and I would not be surprised that the markets would take this extremely positively. The company has stated that possibly May 21 could be a time where they could possibly, announce the commercialization of the vaccine. But I think what is important to note is that they have they've also told analysts that this could be priced very competitively. So I think the opportunity is large, and if everything goes well, then FY22 could be a very significantly better year, considering that incremental revenue and profits from the COVID vaccine could get translated into the bottom line for Cadila. But I think more importantly, Alex, if you look at the operational numbers from the existing business, the Q2 numbers were very strong. In fact, 13% growth in top line, but a very strong double-digit growth both in the US markets as well as the domestic markets. EBITDA growth of almost 38%, and the bottom line was also very strong. So I would believe that the markets would obviously look at it extremely positively. The net debt has also come down quite significantly for Cadila in Q2. So overall, the valuation comfort as well as the kind of opportunity for the COVID could possibly result in a significant re-rating. In fact, my sense is that looking at FY22 numbers, even from the existing business, the stock looks pretty attractive despite the fact that there has been some sharp run up on the stock price. So I think investors should take a longer term call here. Our sense is that 550, 575 cannot be ruled out if possibly the vaccine is finally commercialized. So I think net it's a good opportunity, and hopefully markets would obviously give it a thumbs up.
All right, we'll have to see how it opens in trade as well, Avinash, today, because the kind of run-ups that we've seen, even on an intraday basis in some of these stocks, has been phenomenal. Which brings me to the second stock, which is DLF. DLF's rental arm has entered into an agreement, Avinash, to acquire the stake of US-based Heinz in a premium commercial project in Gurugram for 780 crore rupees. That's the latest update. And a lot of these real estate players have been in focus, right, over the last few months. We're getting incremental information that, in fact, there are sales taking place on the residential side and perhaps also on the commercial side. There is some pickup in activity and return to normalcy. So is this a good time to once again look at DLF very strongly and seriously?
Yeah, I think Alex, if you look at the Q2 performance for DLF, not only the company posted a profit of almost 232 crores, and which was sequentially extremely better, because sequentially in the first half the company incurred a loss of around 70 crores. So I think the company has bounced back. There has been definitely good demand in the Q2. Most importantly, this recent development of buying the rental arm buying basically the stake of Heinz for 780 crores is definitely a big positive, because we believe that could give better stability to the earnings from the rental part of the side of the business, which is extremely solid. Our sense is that even on the debt side, the company has been making conscious efforts to reduce debt on the books. And more importantly, management commentary, as you rightly pointed out, both for the retail, residential, as well as for the commercials, have shown a very strong order book inflow in the second quarter. So I think clearly, the stock should get re-rated. But considering the kind of sharp run-up, Alex, which you have seen, I would be a little skeptical to enter at these levels. I would wait for a correction. But yes, the medium to long-term prospects look pretty solid. And hopefully, I think the second half as well as FY22 could be a lot better for the real estate market, and that could benefit DLF. But at current valuations, it looks slightly pricey.
All right, wait and watch is a call on DLF, which brings me to the last counter, Avinash. And there isn't really a news-based development on Gujarat Narmada Valley fertilizers and chemicals, which I will say GNFC just to make things easier for me. But there was a lot of delivery buying, very strong delivery buying, in fact, on Friday, as much as 40.01, and the stock did gain about 5% on Friday. And it's trading quite strong. So, what is your view on the counter, and is this indicative of a lot of optimism and positivity building up in GNFC?
Yeah, I think Alex, GNFC is one of the monopolistic players in the TDI, segment, which is a very unique product for them, and actually contributes almost 60% to the top line. In fact, GNFC can rightly be termed as a chemical company rather than a fertilizer company. And I think the good part for TDI is that the government has imposed an anti-dumping duty, which obviously aids GNFC to sell this product competitively in the market. More importantly, large global players in the TDI market like BASF have announced price increases on TDI. So our sense is that one could definitely expect better numbers in Q3 and FY22. And considering the fact that this product has got no competition from any local player, our sense is that it would help the company significantly. More importantly, if you look at the capital structure of GNFC, very little debt on the books and a very good dividend player. Plus, I think the business is growing. Fertilizers is also a pocket where I see a decent opportunity in the coming year. So net, I think probably the delivery buying which has happened is on expectations that the Q3 could be significantly better than the first half of FY21. So I think net valuations still remain to be attractive, around 6 to 7 times on FY21 and almost 6 times on FY22 earnings. So I think it definitely could qualify as a good, reasonably medium-term pick, provided investors have got a 12 to 18-month horizon. So definitely looks interesting.
Understood. Thanks so much, Avinash, as always, for joining me on this program. It's been a pleasure. And to you, dear viewer, thank you so much for tuning in. I hope that you have a profitable start to the end of the last week of the year. Do stay tuned, lots more coming up on BloombergQuint.